Alright, what's good, y'all? It's your boy Zone. I'm back with another video. Now today I'm finna be going over this gold trade that happened today. It's like a little trade breakdown video like I usually do. I never really do them on gold. I used to do them on just GBP USD and like the Forex pairs, but for this video I'm gonna do it on gold because I know a lot of y'all on my channel, y'all like gold. I built my fan base up off gold, so I'm gonna go back to my roots and kind of do a trade breakdown for y'all of this trade right here. The trade actually went both ways. I'm gonna show y'all how y'all could have caught it. And yeah, before we start the video, make sure y'all do me a favor, just drop a like on the video, subscribe if you're new. We just hit 13,000 subs, so I appreciate y'all for that. Yeah, let's hop right into it. All right, so before we start, I'm gonna go ahead and just show y'all how many pips this trade went for. The entry was up here, right? If we just drag it down to the low, which usually I would just take the trade to the 80-yard low, but if we just taking the trade all the way to the lowest that it went, let's just see. We got a 250 pip trade coming down out of London session, and then New York session did the New York reversal, and it came back up another 200 pips. So in total, this is a 400 pip trade for the day. I'm gonna show y'all how I catch these trades, so y'all can be able to do this the next time. So let's go down to the 5-minute chart right quick. Usually what I do is I just go ahead and basically when I'm trading, I'll look for like trades off of the Asian session, right? Like the Asian range. So you got the Asian high, the Asian mid, and the Asian low. I'm not gonna go too much into detail about this, but it's basically just the Asian range. Like you go where Asia opened up at, and you can drag a box to the Asia's high whenever Asia range stop. You know what I'm saying? Then that's your Asian range. You got your low, your midpoint, and then your high, right? This is like where we like to either look for entries at, or we like take profit at these levels and stuff like that. So based off this, and I know that when we opened up during London session, we was below the Asia mid, or we was right around Asia mid. So if we go to the 15-minute though, let's look right quick, because the 15-minute really show you everything that's happening on this trade today. So if we look at the 15-minute chart, right, let's draw off a box on all of these wicks right here. Let's just draw for a little zone at this area. Okay, what did we see at this zone? We got a bunch of wick touches, right? 1, 2, 3, 4, 5, 6, 7 before price actually started to drop, right? If you see that price is not trying to go above this area, why would you not be looking for anything other than sales, right? I'm gonna show y'all how y'all get the entry, but this is how I knew that price was gonna sell before it even happened. Let's just go over to this side when London session first opened, right? This was like 45 minutes into London session. Matter of fact, no, yeah, like 45 minutes into London session when this candle closed. And what do we get right here? We got an inverted hammer, right? The inverted hammer candle means that price is about to reverse, okay? It doesn't mean that price is going to reverse soon as this candle closed, because as you can see, say you would have got in on this candle, right? You would have caught a cool little 40 pips, but price would have came back out and stopped you out, right? Because if we expecting price to go low, we not just going to take this little profit right here. We want to see it break through the Asian low and continue all the way down, right? We either going to take price at yesterday's low, which would have been down here for 100 pips, or we just gonna hold it until it show us that they want to start coming back up. Because normally when gold shoot down, it's not gonna give you just one big crazy wick and come back up. It'll give you some sort of price action, which happened down here, and I will show y'all that in a second. But this was the candle right here that let me know that price was about to sell, but it just wasn't an entry candle, right? Because y'all know the only type of candles I like to get in on is like engulfing candles and stuff like that, right? So this wasn't our entry candle, but this was the candle that let me know the direction that the market potentially wanted to go. And then as you can see, price came down, and then it gave us an engulfing right here, right? But we wasn't looking for buys, okay? So price come over here back to this zone that it made, right? It started creating a whole bunch of more wicks, and that's when we get the engulfing candle right here on the 15-minute chart, right? And every time we see this engulfing candle, what are we trying to do? We want to wait for price to come back to the 50% of the engulfing, and then we want to take price down. But me personally, I don't usually wait for that. Like, I'll just go ahead and pull the trigger as soon as the engulfing candle closes, and I'll put my stop loss above the candle before it. So my stop loss would have been maybe about a 23 pip. On my trade, it was actually just a 19 pip, but I mean, the smartest thing to do is just to put it above these wicks right here, because price could always want to come back up and grab this liquidity up here and then push down. So you just got to play it safe. You don't want to get stopped out the trade and then price go your way, because then you're gonna be looking sick, right? So let's go down to the 5 right quick though. If we go down to the 5-minute chart, we actually got an engulfing candle before the 15-minute engulfing candle happened, right? And this is why I always tell y'all to play the 15-minute, to play the 5-minute chart, because you could get better entries with the 5. So let's look at this. What do we get? If we zoom in, I gotta take this off. If we zoom in to here, let's pay attention right here. We got an engulfing candle right here, right? It almost engulfed both of these candles, but it just needed to, all it needed to do is engulf this green one, right? It's not the prettiest engulfing candle because we got another engulfing candle right here, but this is the one that we want to play, right? And if we go down to the 1-minute chart, let's see, we probably got a better one. Let's look at it. I don't know why the chart looking like this. Let's just stay on the 5, because I don't know what's going on. It put me all the way back there. Okay. So yeah, we get the engulfing candle right here. Price do push back up into this candle as well. So you could have did the 50% of this engulfing candle too, right? Then you take your trade here. Now your stop loss is even tighter, right? Because at first our entry was down here on this 15-minute closing, which would gave us about a 20-something pip stop loss. But if we take it on a 5, right? Look at our stop loss now. We got a 7 pip stop loss, which you want to put it up a little bit higher. So you really want to give yourself like a 10 pip stop loss, just because gold spread be kind of crazy on certain brokers. So you want to make sure it don't just stop you out too early, right? So give yourself like a little breathing room on the stop loss. Just put it above the wicks, right? And now we got a trade that had a 7 pip stop loss and went for 250 pips, like literally instantly. Soon as it came up and hit this 50%, tank, right? 250 pips in the bag. Okay, and this is like a daily thing with gold, because the Forex pairs don't give you this much volatility. Like, this is why I hate the Forex pairs so much. They don't give you trades like this, right? And I've been struggling trading the Forex pairs recently, but gold always gonna come in clutch. But let's look at how you could have caught this back up. Say you was asleep during London session, right? And you couldn't catch this move, or say your price action skills is just not like that good to know when price is about to reverse like this, because this isn't my normal setup. My normal setup is what happened down here, right? But once you develop like certain skills, like for price action and being able to just view the market in any type of scenario, you're gonna be able to catch these trades as well. But let's say you missed out on this one and you wanted to catch this one down here. What do? We wait for price to reject, right? It pushed back up a little bit, then it pushed back past it. So now we got a little divergence right here, right? We just gonna take price like this. This is divergent, okay? What do I always tell y'all every time I'm taking one of these trades based off of divergence, right? I'm always looking for the engulfing candle off the divergence. You could take the trade at the 50%, and then we just gonna go, right? We either want target one of these highs, or we just gonna hold the trade. So you take the trade off this engulfing. Let's say you took it right here, just straight off the engulfing candle. That would have gave you about a 50 pip stop loss, right? And this is the reason I don't be sending signals for gold, because if I give out a 50 pip stop loss, people gonna look at me like I'm crazy. But you really just gotta adjust your lot size to the trade, right? And then you can add more positions in it as price start to push your way. But you would have had this 50 pip stop loss right here, right? 45 pips. But look at how much price push up, 170, right? But say you took the trade off the 50% of this engulfing candle. Now your stop loss is 30 pips. You get 170. Okay? So this is where it get a little bit better, because I'm pretty sure it happened. Let's go on the 1 minute chart right quick. Bro, look at this every single time I'm telling y'all. We go on the 1 minute chart, right? We already got our divergence marked up. Now we just waiting for that price action, right? And I always tell y'all, go on the 1 minute chart and look for the entry, because the 1 minute chart is going to give you that engulfing candle before it happened on the 5, right? And I'd rather take the 1 minute engulfing then the 5-minute engulfing, because the 1-minute engulfing is going to give me a tighter stop loss, right? So remember, if you would have took the trade off the engulfing on the 5-minute, like straight off as soon as the engulfing closed, you would have had a 50 pip stop loss. If you took it at 50% of that engulfing candle on the 5-minute, you would have had a 30 pip stop. Let's look at the stop loss on the 1-minute chart. Boom, we're going to take it from here. A 20 pip stop loss, right? And I always tell y'all, put your stop loss a little bit below the wick just because of spread. So you really wanted to have about a 25 pip stop, because price did push all the way back down to this 1-minute candle. And then, you know, it probably would have stopped you out because of spread. So you want to just give yourself a little breathing room. But easy, right? And if we took it at the 50% of the 1-minute, bro, 12 pip stop, right? 15 pip stop for the spread. And you get 190 something pips out of this trade. Bro, it's easy. I'm telling y'all, every single day, gold give out moves like this. Sometimes gold gonna move still, but gold is like one of the best pairs that you can trade. Gold, US 30, NOS 100. The indices and the metals and stuff, they perform way better than the Forex pairs because they less manipulated. But I'm not gonna ramble on too much. Hopefully y'all enjoyed the video. If you did, make sure you drop a like button. Let me know if y'all want me to keep doing these trade breakdown videos for y'all. And I'm gonna start doing the live trading videos again next week. So y'all should see those videos starting to come back out. And yeah, like I said, drop a like on the video, subscribe if you're new. I'm gonna see y'all in my next one. Peace.